The world of gaming right now is the fastest growing sector, and it's evolving at a breakneck pace. In the final hour of trade, look at Glue Mobile. This stock is trading around 35% higher at the moment, already taking out the $12.50 a share all-cash purchase price Electronic Arts just offered. We're at $12.71 right now, but this deal gives Glue a $2.1 billion value. Glue, of course, is best known for games focused on celebrities like Kim Kardashian, but its portfolio also includes Design Home and MLB Tap Sports Baseball. EA is getting props from investors for the acquisition as well. EA stock is moving higher by 2.7%. Obviously, mobile is, though, not the only way that the gaming industry is expanding. Yesterday, of course, we had Skillz CEO Andrew Paradise on to discuss his gaming platform tools company and the deal that it's just struck with the NFL. The collaboration will launch a game developer challenge that will enable offline sports to have better access to online gamers in the way that the gamers really envision it. As you take a look at some of the competition, we do have Take-Two Interactive lower. It came out with earnings yesterday. A little bit of a disappointment there, so it's down 5.8%. Activision Blizzard up 1.7%. And Microsoft, the parent, of course, of Xbox, is moving higher by 0.75%. And you know what? It is not just child's play. We're looking at the betting apps, mobile betting, DraftKings, Flutter, which has the majority stake in FanDuel, PENN National Gaming, and our parent Fox, which of course has Fox Bet. We got a mixed picture. We got two up, two down. I want to bring in our traders from the floor show, Tom Hayes and Scott Bauer. Tom, look, with all signs pointing to mobile as sort of the place where people want to consume media right now, what do you like in this space?
Yeah, well, Liz, the interesting thing about this deal, $2.4 billion cash, was that despite EA's stock trading at 26 times earnings, they decided not to use any stock. So if management wants to hold on to their stock, I want to hold on to their stock. It's a $175 billion industry last year. 50% of that is mobile. Glue has 14 million monthly mobile users. EA has 100 million, but Glue grew at 25% in Q4. EA is only growing that business at 3%. So Glue's going to help EA grow their mobile. EA is going to help Glue with international exposure and distribution. The competitors, as you said, Take-Two is trading at 35 times earnings with flat growth. We don't like that as much. ATVI, Activision Blizzard's got Call of Duty. They're trading at 28 times earnings, and they're going to grow at 16%. But EA's got FIFA, and now they've got Glue Mobile. They're trading at 26, so the lowest multiple and what could be the highest growth in years to come. We like more growth for a lower multiple, Liz.
Well, yeah, Scott, I agree with Tom on that. That's what you want. You want to be buying it at the right price. But these are momentum names. And had you asked me when Zoom in the early part of the pandemic was moving so much higher, and it was, I don't know, $50 or something, somebody called and said, should I buy it? And I said, no, it's just a momentum stock. Look at Zoom now. I mean, it's just, I could pull this thing up. And again, it's not a gamer stock, but are these the new sort of stay-at-home stocks that might really have more wind at their backs?
So listen, Liz, Tom made a great point. You know, this deal being an all-cash deal, they're not giving up stock. The insiders are holding on to the stock. In general, the biggest aspect I love is the generational demand. Young and old love video games. And that means the market is going to continue to grow. And it's not just a U.S. phenomenon. This is a global demand. And it's the highest it's ever been. The demand in semiconductors and the recent console sales that we're seeing, they're at peak demand also. So we're seeing these companies, both on the gaming and the betting level, just expanding and expanding. So that 26 times earnings, you almost have to throw that out. This could be 30 or 40 or 50. I love EA here. Also, from a technical standpoint, this thing's coming up to major resistance, like a triple top up at 149. I think this thing breaks out and the sky is the limit. I really do, Liz.
And we showed the semiconductors, of course. All of this needs microchips to run. So I get it all. Guys, I did want to mention Zoom because, again, it's trading right now $433. So what happens, Tom, to the hot stay-at-home trades? Do the Pelotons survive and then the DoorDashes not do as well? You got to give me a sense here.
Well, Liz, you mentioned online betting, and this is a perfect analogy because you take a look at DraftKings. It's trading at $25 billion on $800 million of revenue, 30 times sales, and that kind of flew with those stay-at-home stocks last year. But a good way to play online betting, I would go for Fox Corp. Okay, you've got record ratings in the second half of 2020 on Fox News and Fox Business, and it's trading at 13.5 times earnings, and you get Tubi streaming for free, and you get Fox Bets for free, versus Penn National, which is trading 69 times earnings, and their growth story is Barstool. They only own 36% of Barstool. So I'd play that through Fox Corporation. They've got $5 billion of cash on the balance sheet. They can buy back stock. They can do acquisitions, and you get the betting business for free. Yeah. How's that?
Yeah, and today Fox A is 5% cheaper. So if Tom's right, it goes higher. And we'll continue to watch all of this. And there's Tubi as well. That is a big deal for Fox. Tom, Scott, great to see you both. Thank you so much.
Thanks,
all right, in the
Thanks,
latest episode of